What is up, everybody? I want to go over some questions from other traders that I've gotten, such as, what am I doing in this volatility? Can I even do 6 tick stops in this volatility? Will I live stream at some point? And can you show me profile setups? So I do want to go over a lot of that stuff. I want to show you adjustments I'm making in my trading right now because obviously the volatility is higher. This is from today. This isn't the full session, but this is from today. All these trades were after FOMC, after the release, and this is from May 4th, 2022. Man, my face is itching. But anyways, as you can see, I'm trading one lot trades, and clearly my MAE is not 6 ticks. If you're not familiar with MAE or MFE, MAE is how many ticks the trade went against you while you were in it. MFE is how many ticks the trade went in your favor. And you can tell if a trader is decent based off these stats. If they're showing you wins, but they're not showing you these stats, you need to question it. So, with that being said, let's talk about it. So I am making adjustments. If you've not seen my Sweet Spot 2 video, check it out. I talk about when my trading works and when it doesn't work. And I'm talking about running tight stops. I'm talking about 6-tick stops. There's a point in time when 6-tick stops works, and there's a point in time when it doesn't. Now, with this higher volatility environment, it's not going to work very well, especially after an FOMC release. It's going to be damn near impossible to hit a 6-tick stop trade without getting stopped out all the time. And the reason I know that is because I've been stopped out a lot in that type of environment. And hence the reason I made my Sweet Spot video explaining when that works and when it doesn't work. And currently we're in an environment where it doesn't work. Now it does work at specific times in the session, but the broader volatility at times does not warrant it. So it's very important to identify shifting conditions, and I'm going to share with you a method I use to identify shifting conditions. So let's go ahead and do that. So let's talk about why am I running one lot trades. First and foremost, it's all about risk to reward. So what's going on is when I get into a trade at, say, this price with 4 lots, I'm risking $50 a tick, right? So I could lose 50 on 2 ticks. It'd be 100, 150, 2, 250, then 3, right? So, I'm risking a max of $300. So that for me I'm comfortable with that. $300, I've been doing that for a long time. So in order for the trade, so let's say I enter here, the entry is here. In order to pull a 2-to-1 risk to reward ratio, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 ticks would be a 2-to-1 RR trade. Most of the time, the environment will warrant this kind of risk to reward ratio. Excuse me. So, not all the time. There's times where it could be too slow and too choppy, but like a low volatile chop to where I'm not getting that. And that's where I'm kind of on the other edge of the bell curve as far as my sweet spot not working when it's too slow. There's a point where it's too fast. Obviously, you're getting these moves, these four-point moves, no problem. You're getting, 6, 12, 20, you're getting 24 tick moves relatively quickly, just no problem. You can get 24 tick moves on average. So with that happening, I'm going to get stopped out all the time. So I have to make an adjustment. I have to do something different. This is more recent and it's been working really well. So here's what I'm doing to make adjustments in this current condition. So what I want to do now is, since I'm risking a one lot, that's going to be, what is it? I'm risking $12.50 per trade, per tick. So now I can risk a 24 tick stop loss, and that is going to be minus 300. So now I'm still willing to take this $300 loss, but now that my stop loss is 24 ticks, I'm more likely to be able to actually not get stopped out all the fucking time and hit a good trade. The problem is now I need a 42 tick win to get myself a 2-to-1 RR trade, right? And that definitely can happen. So what you need to understand about my trading in general is I do fight my way into trades. There's a point in time when I know I need to be scalping. There's a point in time where I can hit it and hold it. So I'm getting relatively decent at knowing when to switch between straight up scalps and when to actually start holding. That is a skill I've been actively trying to develop. I think as a trader, if you have an edge and you stick to that and you're not trying to push your boundaries and try to tweak it, try to make it better, try to do different things with it, I think you're going to plateau yourself and you're just never going to be a next level trader. That's the way I feel about it. I'm always evolving. If you watch this channel from the first video up until now, I'm always evolving. So when you come here, understand that I'm getting better, or attempting to get better every day, right? So with that being said, I do fight my way into trades. So there can be times where, and let's go back to this, we have, let's say in a normal conditions, we're entering the trade here, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Now, I'm not always going for the 2-to-1 risk to reward ratio. If I can do better, I want to, but I do have targets that come out here. Then I have another target that comes out an additional 6 ticks above that. Another target comes out another 6 ticks above that. Because as it's going up, another additional 6 ticks, it goes from a 2-to-1 to a 3-to-1 to a 4-to-1 to a 5-to-1. And I'm simply having targets come out on a bracket order to mark the prices I want to just kind of gauge where I am as far as risk to reward goes. Now, I am trading based off of volume profile structure, momentum, and a shitload of other stuff. So I'm not strictly trying to get out at a 2-to-1. If I can do better, then so be it. But that's just sort of gives me a rough idea of what price a 2-to-1, 3-to-1, 4-to-1, and a 5-to-1 would all be out, right? So when I go in 4 lots, I'm all in. I go all in, right? And then at a 2-to-1, I have a 1 lot come off, it's sitting in the queue, and then on a 3-to-1, I have another 1 lot sitting, 4-to-1 another, up until all 4 lots are in different places. And again, it's just to give me an idea of what the risk to reward is on this setup. I'm not trying to get out because of it's a 2-to-1. I don't want to have like this hard exit. It all depends on what the order flow is doing, the price action, the volume profile structure, and a whole bunch of other shit. So when I'm getting into a trade, often I'm fighting my way in, right? So there can be times where I'm picking up a 1-tick win because I'm trying to get the fuck in it, and it's not working. I'm trying to get in it, and it's just not working. So I cut it and try to lock something in instead of a break even if I can ideally do that, right? So when I get into a trade, sometimes it'll go up to where the 2-to-1 would be. And based off of other things, I'll scale a 1 lot off. And usually my first set, I'm always trying to get off relatively early if I'm not super confident in the trade. But if I'm sure that there could be a bigger move, I'm going to attempt to hold the other 3 contracts, and sometimes it just comes back, and then I'll pull it down here or whatever. Or I'll let it test me. Maybe the volume slows up. Maybe I think there could be a bounce there based off of price action and all that, so I might hold it. And if it's just starting to fail, I'll cut it. So there's a lot of times where I'm scalping, but that's not my intention. I'm trying to hit a fatter move at times. There are times where I want to scalp, but if I'm going to scalp, it needs to be a scalp that will at least yield a 2-to-1 based off of a bunch of other variables. So I need to at least be locking in a 12 tick. There needs to be a potential of a 12 tick move in order for me to even consider taking a trade. And sometimes I'm just not getting that at all. So I can print a really solid P&L staying within that 2-to-1 risk to reward ratio, but that's because I'm not trying to do that. It's just I'm scalping because there's so much shit going against the trade that it's just not working the fuck out. So now that I'm trading a 1 lot, here's the difference with a 1 lot. Okay, let's talk about the risk to reward on it. So this is the entry right here, right? So 1, 2, 3, 4 ticks would be $50, right? Well, on 4 lots, 1 tick would be $50, right? 8 ticks, 1, 2, 3, 4, right here, this would be 100, right? On a 1 lot. Whereas the second tick would be 100 on 4 lots. So what's going on is now that the volatility is increased, my stop loss is now, minus 24, right? Because I'm willing to risk $300. The thing is, now I'm looking at this from how can I say it? Like, my eyes are kind of blurred a little bit, and I'll explain why. So when I pull the trade off maybe 4 ticks or 8 ticks, that's the equivalent of me getting out for a tick or 2 on 4 lots, as far as the monetary value goes, right? So there are times where I'm looking at it, but now I'm looking at it from a more stretched perspective. I guess that's a good way to explain it. I'm trying to explain this so hopefully you guys can understand what I'm saying. So, essentially what I'm doing is I'm looking at my normal profit and loss on 4 lots, but now it's being stretched outward, risking the same amount of money on the downside, right? And I would be making the same amount on a 2-to-1 risk-reward ratio, except for it's got to go a lot further in my favor. But with the volatility increase, that's more likely to happen. So now when I'm looking at a 4 ticks, it's kind of like the equivalent of looking at a 1 tick win. Looking at 8 ticks is like the equivalent of, looking at 2 ticks, so on and so forth as it goes up. And it is the equivalent as far as the profit and loss would be, whether I'm trading a 4 lot or a 1 lot. So that's the way I'm starting to look at it. So I'm looking at the trade from the same perspective I normally would, but it's more stretched. So the reason I say that is because the trades still work. So the trades are still working, and the only difference is I trade a lot of volume profile. The only difference between, a volume profile and high volatility is the amount of movement. Then in low volatility, it'll be less movement. Let's pretend there's still a tick scale, 1, 2, 3, 4, 5, 6, 7 ticks, right? So you're still getting volume profiles. They're still being built. Auction market theory is still working. The thing is, it's more stretched out. It's a bit more noisier. I would say yes and no to the noise. Yes and no. Yeah, there's a fair amount more noise, but then again, low volatility environments can have a tremendous amount of noise as well, where it's just chopping excessively. So the setups are still there. I'm still trying to be as precise as possible. I don't want to take I don't want to use 24 tick stop losses in my normal trading, because if I start doing that when the volatility is less likely, well, now I got to get an even bigger risk to reward ratio, right? I got to get 42. What is it, right? 24. What is it? What is 24 times 2? 8. 48 ticks. That's it. So I need a 48 tick run to get a 2-to-1 risk reward ratio. And I like trading tight because I can get those 2-to-1, 3-to-1, 4-to-1s a lot easier because the market doesn't have to go as far. And when your volatility starts contracting, it's less likely that you're going to actually be able to even pull that off. So that's why I don't want to get complacent and trade bigger stops. I want to trade as tight as possible within reason. So if the volatility is clearly too much and there's just absolutely no way a 6-tick stop's going to work, and you can tell by just looking at the price action on your DOM or whatever, if it's just ripping, no problem, what, 4 points? If it's pulling 4-point moves, no problem, well then it's very volatile and a 6-ticker ain't going to work. So therefore, I'm no longer in that sweet spot like I mentioned in that video. So this is an adjustment I'm making to kind of help myself on the outer edge of my sweet spot, and now I'm able to sort of perform in that with a different adjustment, right? So this is an adjustment I've made, and as I make this adjustment, it's going to start to expand my sweet spot out even more, because as a trader, there's going to be a point where your trading is really good, and at some point, your trading is going to suffer. And that's because you were sweet spotting, and you need to learn how to trade on the edge of your comfort, and then you're going to start to expand out your sweet spot, right? So, for example, that maybe this is your sweet spot right now. Maybe you have a sweet spot right here, and as you get better and you learn to trade on either side of your sweet spot, you can start to expand out further and further. So, this would be low volume and this would be high volatility environments. So over time, you keep making finer and finer adjustments, and you're to the point where you're becoming more of a professional, in my opinion, because you now have adjustments you can make in the different conditions, so you can trade the different conditions. Now, my setups pretty much work across the entire board. The thing is, it's the adjustments that are needing to be different. And by leveraging a 1-tick 24, a 1-lot trade with a 24-tick stop loss, I do put the marker out, right? Yes, I can't do scaling like I normally would, but it's so volatile. I mean, you guys saw that P&L. That was, $900 on 1 lots on so many trades is pretty good. And that's because the volatility is there, right? So if that volatility contracts, then you're not making that kind of cash on a 1 lot. So you want to start making adjustments. So one way I look at volatility is, let's say we have all these ticks again, right? A fuckload of them, right? I don't know how many this is. But, if I'm seeing it churning, on average, 4, 8, I would say about 8 tick range if I'm seeing it, because I'm looking at a 3-second chart, by the way. So I do look at a 3-second price chart, so I do want to talk about that real quick. So I do look at a 3-second price chart, and it is the price chart on my Auction Vista next to my Jigsaw. If you want to save $30 on Auction Vista and Jigsaw, use my affiliate link in the description and then use my coupon code. I would greatly appreciate that. But that is what I'm using as the 3-second Auction Vista chart. For one, it aligns with the DOM, which I really like. I know it's a shitload of noise. I know a 3-second chart is a fuckload of noise, but in order to be a precision hitter, you need to learn how to read the noise. And I do look at price action, actual physical price action, price patterns. You know, as a retail trader, you might look at head and shoulder patterns, wedge patterns, all that bullshit, based off of the way the price bars are moving. I am doing the same thing, but on a 3-second chart. But I'm not necessarily using stereotypical price patterns. There's certain things I do that are strictly fat cat, that I don't, that's just really not out there on the internet. It's strictly my price patterns that I'm using. And those price patterns must align with volume profile. Now let's talk about this real quick. Somebody asked me, can you show how to do setups on volume profile? Absolutely not. Reason being is, if you've checked out my last video on price sweeping, it took me 30 fucking minutes to explain that price sweep. And I went over several scenarios of what it could mean in specific areas, when I might want to trade with the price sweep, when I might not want to trade with the price sweep. So in order for me to share volume profile setups, I cannot give you simple generic shit, because I am not trading simple generic shit. If I'm going to share something, it's going to be stuff that's working for me. And the only way to really show what I'm doing is, well, every trade is very unique, first and foremost. Every trade is very, 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 very unique in the way you trade it, the way it feels, the way it moves. So there is no rigid trading. My trading is very fluid. And I think a lot of retail traders, it's good to be rigid when you first start. And this is another example. Let's say we're real rigid, right? We trade a very specific level, a specific way, and it won't work that often. But the more fluid we get and we don't trade that exact level, we start to trade around the level based off of other things, then we can start to get the trade to work out for us more and more. So if you're trading a moving average and you're just hitting the moving average, yes, it can work at times. But now let's start trading around the moving average based off of other things with multiple, factors of support. So as we use more and more multiple factors of support, higher time frames and lower time frames, again, we start to expand how we can get the trade to perform for us based off of that specific area more and more and more. So when I'm going into my volume profile trades, I'm consuming a fuckload of information, right? If you're not able to read the order flow, you're not able to read the tape. If you're not able to be quick, if you're not able to read the price action on a 3-second chart, if you're not able to use multiple volume profiles on multiple time frames, then you're simply not going to be able to take my volume profile trades. So what I would have to do is I would literally have to make a 30-hour video series on how I do it. And if I'm going to make a 30-hour video series, I'm going to sell that motherfucker, okay? Because I am not doing that bullshit on fucking YouTube, because that is a tremendous amount of fucking work, right? And the problem is, as a viewer, if you're not watching every single one of those videos, the context is all fucked. Whereas if I sold the shit, and this is probably a hint of what may come in the future, I don't know. I've tried to do stuff to sell to you guys in the past, and it's so much work. I don't know if I'm going to actually follow through with doing that. But if you pay for something, you're more likely to actually go through all of it instead of me putting shit sporadically on the internet. Also, I don't want to give away all my goddamn fucking secrets. Yeah, there's shit I do that I don't see other people doing, and I've spent fucking 5+ years developing my edge, and I just ain't willing to give all that shit away, right? Especially because I know there are people who don't like me that watch this fucking channel, and if they want to fucking know about it, they can motherfucking pay for it, which I know they wouldn't. So that keeps them assholes out. And I just don't want to be giving away everything. There are traders, once you hit a specific level, you just don't want to be giving it all away, right? Now, don't get me wrong, I do share with people, and this now comes back to streaming on YouTube. I ain't doing that shit. I ain't doing that. I've been streaming on Discord since 2020 of January, consistently streaming on Discord. The thing is, it is now private, okay? So I do it, and I've been doing it in front of a small audience. I ain't doing that shit on YouTube. First and foremost, when you're streaming in front of fucking people, you're getting all these goddamn questions, and then you get distracted, and then you're not really trading. And if you're doing it on YouTube, it's always new and random people that are always coming in, so they really have no idea what you're fucking doing, and then you're constantly re-explaining shit that you explain to everybody else that's been consistently there. So for me, I do it. It is now locked because the audience has been growing. I've done it for free forever. I'm still doing it for free, but it's to the point where it's private, and there's just really no way to get in it. I do it for the people that have been, they went into my descriptions on my videos. They see the Discord. They go to the Discord. They see me in the streams. And the people that make the effort to show up every fucking day are the people who I do it for. The people that have been showing up month after month after month and really understand what I'm doing is who I'm doing it for. Not people that are going to randomly pop in and out because they have no idea what's going on. You have people that'll... And I don't want to waste my time on people that ain't showing the fuck up all the time. Do you understand? I don't want to have to keep regurgitating the same shit over and over and over because people are popping in and out randomly. Right? If I'm going to help people for free, I want you to sit there, but I want you to do it on your own free will in accord, and those are the people I want to help. People that want to know what I'm doing, the people that show up, and the people that are willing to sit there and that have been doing it and have proved to me that they are going to do that because I've ran private Discords in the past and all that. And I've wasted time with people, and I just am not about wasting fucking time. And I'm not about doing this in front of a large fucking audience. And I've listed off many, 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 many reasons why I simply will not do that on YouTube. Just don't want to do it in front of a bunch of people. Don't want to give all my shit away for free. If you want to see what I was doing, then you should have been consistently showing up in the Discord streams. You should have been reading the descriptions, but as I grow, my subscriber account grows, my audience grows, there's more and more demand for what I'm doing. And as there's more and more demand, I'm going to eventually put a price tag on something, but not the streams. Again, there's just no way to get into it, and I'm not charging for it. So I want to continue to give to the community for free. And if I do start charging for shit, and I put together a 30-hour thing on exactly what I do, now you can watch it without coming into my streams. And now it's to the point. Because there's a lot of times where you're going to sit in my streams and nothing is happening. And if you getting in and out of the stream, you might get out when something happens and I explain what happened. Right? And then you show up and then I fucking already explained it and you're like, what did you do? And it's like, shit. Whereas if I have all the material in one place, you guys can watch it whenever you want to, and it just lays it out, and there's no sitting around for hours without me explaining something, like in a live environment, right? And what would also be nice, if I choose to actually pursue that, because again, it's going to be a fuckload of work that I don't know I want to really do, what would be nice is if I sell 2 of those, because it's going to have a price tag, right? it's going to be relatively affordable if I choose to do that, because that's, you know, a 30-hour deal on my profile trading, and I'm going to explain why it would take that long, okay? You know, I'm definitely charging for that. And, you know, selling 2-3 of those a month would make doing this, I would have an income, and it would be an incentive to continue to do YouTube, right? Because I don't make shit off YouTube, and YouTube is another fucking job. So I'm sure you guys want me to continue to make content, right? Well, if I'm going to continue to make content, I do need to get paid for this shit. This is why I push affiliate links, because it works, and the ad revenue and the donations, because that all adds up, and it makes it to where this is kind of worth it. The only way this is going to really be worth it is if I just have a bigger sub count, and that takes time, right? But the thing is, if I'm selling something, I put in a bunch of work, sell it, people buy that, then I have full-time income from that passive revenue source, and I'll continue to do more free content, good content, right? More people will buy that shit. It'll make more, and it'll just make doing the YouTube shit worth it, right? So and you don't have to buy the material, right? But the thing is, other people buying the material is giving me a good enough income to where I'm more likely to not get burnt out and continue to make free content, right? And so people buying shit is supplementing the ad revenue and all that bullshit. So therefore, somebody buying something, because somebody's going to want to buy that. I'm telling you. You guys seen my free fucking content. You guys love my content that are subscribers, so you know you're going to get good shit if I'm charging for it. You're getting good shit. You're getting really detailed good shit. It's going to be a lot to watch, but it has to be that way for a specific reason, right? It has to be that way because if you want to know exactly what I'm doing, how I'm doing it, I need to break down each component of the trade, right? I need to explain to you what's the price pattern on a 3-second chart. I need to explain what happened in the order flow. I need to explain where I made an adjustment. I need to explain the higher time frame. I need to explain the lower time frame. And I have to diagnose and spend time on each of those little tiny components for just one trade. So trying to break, and I have broke down trades on this channel, and those are hour-long videos. And I need to give out a fuckload of examples so that way you guys can understand how I'm doing volume profile trading. And again, that's going to take 30 hours. And I'm not willing to do some half-ass shit where I'm not busting down each component. I like to do that. I'm going to do that. So therefore, if I do share volume profile shit, the only way I think you guys would be able to even fucking comprehend the way I do it is 30 fucking hours of case by case by case study. And each case study is a diagnosis of every little component, order flow, price action, volatility, you know, the volume. Because market conditions shift and you need to see how you do it in the different conditions. So just a rigid explanation of this is how you trade volume profile in an hour ain't cutting it. It ain't cutting it. I know I have older volume profile videos, but those are old videos, right? So they're just there at this point. So, and again, full circle here, those of you that don't want to pay for content, well, you know what? I would be cool with this because one person, two people buying the content is going to allow you to get more free content on my behalf, right? Because I need to get paid, so everybody's sort of benefiting, if you will. I need to get paid because this is another job. I don't have to do YouTube. I know you guys would like me to do it, right? You guys want me to continue to do this shit, so I need to get paid if I'm going to work 2 fucking jobs. It's that simple. So, and everything I make on YouTube is a whole different bucket of money than the bucket of money that comes from trading and whatever else is going on in my life where I have multiple sources of income, like rental income from real estate or whatever. I just sold my duplex, by the way, so I don't have any rental income right now. But the money I made, my original down payment on my duplex, only can go back into real estate. So, the original down payment is real estate. It can't go into anything else. So that's how I like to separate my income streams. So YouTube is another job. It takes a tremendous amount of work just to put out 2 fucking videos per week. I'm spending hours and hours and hours doing these. So I'm just letting you guys know what could potentially happen in the future and why it's a good thing, whether you want it or not. And that's just the way I'm running this shit. So I don't really give a fuck, right? Because I know the people that like me for me and like this content will always be here, right? I can't make everybody fucking happy, and I don't want to. So let's go back into this, and this is where, I would have to explain more of this shit over the course of many examples, because me simply drawing here isn't enough. So now we have, so this is an example of using multiple factors of support, which is what I do, right? I use multiple factors of support. So let's talk about volatility and how I'm identifying volatility. So if the price is moving, in an 8-tick range, I would consider an 8-tick, and on average, it's an 8-tick range. I would consider that a sweet spot. When that's happening, I most likely am able to trade a 6-tick stop. I'm most likely able to keep the trade tight when it's, because on a 3-second chart, you're getting these small ranges, right? And then all of a sudden, it pops out, and then you're starting to get a range like this on a 3-second chart, right? And let's say this was the course of 30 seconds, and this was another 30 seconds, right? Let's say that price action was altogether 30 seconds, right? So if that's the case, if we decide to tune out noise, which most people tune out noise, this is what it would look like on a 1-minute chart. It would look like this, right? That's it. You would have 2 bars that look like that. But again, on a 3-second chart, it would, here's the first 30 seconds, then the next 30 seconds, right? And the way this is moving is telling me shit. Because you ever notice like a wedge pattern or some bullshit, a wedge pattern or a cup and handle or whatever, those happen on different time frames. So, same thing here, man. Oh, did I just delete everything? I did. So let me redraw it again. So, same thing is happening on a 3-second chart. Yeah, there's price patterns on a 3-second chart. Now, it's not going to be your traditional price patterns. It's going to be different. Just like bell curves. I can smash a bunch of bell curves together from multiple days, and I can create a composite bell curve. Or I can look at, bell curves on a 5-minute chart, and there will be bell curves. So the thing is, there are bell curves. There are multiple bell curves that are being constructed throughout the session on small time frames. And if you smash all those together, the intraday RTH session could be one large bell curve. And then you could take multiple RTH session bell curves and smash those together, and then on a weekly time frame you'll have a larger bell curve. So using smaller time frame bell curves to time a more midterm bell curve to time a larger curve is where I'm going to try to hit a longer hold. Okay, so that is one thing I'm doing in my trading, but also sometimes there's not bell curves, so I'm using that 3-second price pattern because noise is good. Noise is how you become more accurate. If you're tuning out all that noise and you're not seeing it, then you're not going to be precise, right? So you're going to have to run looser stops. It's how it's going to fucking work for you. Let's talk about the price action. So how do I know when to start adjusting? Well, again, if things are moving in an 8-tick range, that's probably sweet spotted. So I know I can get away with it. And that's on a 3-second chart. Is the average movement about that? Sometimes the average move can be only 4 ticks. And if that's happening, you know, and then it moves up and then it's another 4 tick and then it moves up and it's another 4 tick. Well, timing it's going to be a fuckload harder. Timing it's going to be a lot harder because the trade's going to most likely keep coming back to me. Whereas if it's an 8-tick range like this, and I know it's not perfectly 8 ticks with what's going on over there with the scale, but, you know, if I nail the trade, say, down here, it's less likely to, you know, it's moving further, so it's less likely to come back to me. Whereas if it's just too tight and too low of movement, it's more likely to come back to me. Now, there's a point in time where, you know, it's just moving 4 points, right? And there's 4 ticks per point, so, you know, that's 4, 8, 16 ticks. There's just times, especially like this FOMC, where it's just blowing out and moving this much. No problem. No problem. And I see that on a 3-second chart. Yeah, you can see it on a DOM, but the 3-second chart, which is nice, is historical movement. How fast is that movement going? So this is where I like a 3-second chart, because it's allowing me to really see what is that average movement on the most small scale, because I need to know so that way I can more precisely hit based off of, you know, areas on a profile that are aligning with a higher time frame profile, that's aligning with price action, and is the order flow confirming it? Okay, what does the order flow look like around there? Are orders pulling? Are they not? Is there reloading? Is there not? Order flow is not what I'm simply doing. There's a fuckload more to my trading. Order flow is merely a small component to what I'm doing in my trading. And I know this channel has been order flow dominant, but when it comes to this other shit, there's more to it. So those of you who think you understand my trading, you simply do not. And let me tell you, it's a lot more complex than you think. And the people that tell you keep trading simple, you can't, because again, conditions shift. And your approach has to shift, just like that bell curve I drew up here. You know, if you have a rigid, simple plan, this is when it's going to work. But if you start changing your approach, then your setup's going to work in a broader range of environments. And in order to change your approach, you know, to come out and expand your approach, your techniques have to change, and therefore the information you're consuming is shifting and changing. So therefore, each time you layer this up, and you expand outward, you're adding more and more and more and more components to your trading, and it gets more and more complex. Now, I'm not talking about adding a bunch of MACD stochastics, moving averages, and a bunch of goddamn technical indicators, right? I am simply not talking about that, right? You know, for instance, let's go ahead and just erase all of it, right? I mean, if you look at my trading, you know, we got order flow is merely a component. The problem is if I'm not hitting the order flow in specific areas, it ain't going to work, right? I talk about tick drills, but I talk about doing tick drills without charts. I'm not that good at it. It's a great practice, and I explained it in that one video. Take a look at it while you're doing tick drills wrong, and I talk about why it makes you better, and it's not about P&L. So, but the thing is, if I'm just looking at order flow and nothing else, there's a very narrow window of where it's going to work. Okay, well, let's overlay our order flow with volume profile. Okay, but we need to trade the volume profile in a specific fucking area. Okay, now let's add on another time frame of volume profile. Okay, now let's add another time frame of volume profile. Okay, let's add another time frame a volume profile, okay? And we're going to use these different time frames to fucking time it. Let's add 3-second price action, all right? Let's adjust our approach to the different volatility conditions, all right? You know, is that low volatility or is it high volatility? Okay, let's say that was low volatility. This is where the approach changes. Okay, this is medium volatility. This is where the approach changes. This is high volatility. This is where the approach changes. Okay, I think you get the fucking picture at this point. And each one of these goddamn layers is like an onion. It looks like a fucking onion. Each one of those layers adds complexity to the trading. So when people say trading should be super stupid simple, it's not super stupid simple. Otherwise, the failure rate wouldn't be as high as it fucking is. Because environments fucking change. And as those environments are shifting and changing, your approach needs to shift and fucking change. And if you're not willing to expand outward, you're never going to be the trader you want to be. You're constantly having to learn, experiment, and figure out what's working and just expand out your sweet spot, expand out your trading, expand out your playbook setups, when it works best, when it doesn't work best, when should I scalp it, when should I hold it. And I could keep doing this motherfucker forever and ever and ever, and then I could spend an hour on each one of those fucking components, and there could be multiples of these components that go into one fucking trade. So therefore, it's not simple. My trading is complex, but I can second nature. It's to the point that as you're expanding out and you're adding, each one of these components, this component, that component, make sure it's to the point where it's starting to be easy. It's second nature, right? You're not thinking too hard. Then expand out. Okay, now we can start. How can we put these three things together? Okay, now we're getting really good at trading these three things together, okay? But they only work in a certain environment, so let's add another component to where we can fine-tune the trading. Okay, now we have 4 components. How can we smash all that together? And now we're, looking at different information. Like reading order flow for the first time is really complex, and you're not able to do it. But over time, as you gain more experience, more practice, you're going to be able to do it easier and easier and easier to the point it's second nature, and then sort of. And now I can add tape. Now I need to learn how the tape is interacting with the DOM. How do those two components work with each other? Now I can read the two components as one unit. Okay, let's add that to a volume profile. Okay, how do I make this order flow in this tape component work well with the volume profile? So now we're starting to make that shit work. Okay, but sometimes it works, sometimes it doesn't. Maybe I need a higher time frame profile. Maybe I want to hit bigger picture trades. Well, now I need to go up in time frames. And over time, as you're adding these more components and you get better at them, you're able to process a fuckload of information as one unit. So that's why I simply do not show my trading, and I don't want to give away a lot of stuff. I don't see guys on YouTube giving away how to read 3-second charts, right? Most people are tuning that out. So I read a 3-second chart, right? Because I want to see the noise, because it helps me with the volatility. Then I have a 30-second chart. I need a 30-second chart on my Sierra charts because I want to see the broader price movement, if you will, because a 3-second chart is such a small time frame. You only have so much real estate on your screen that I can no longer see prior pivots and rotations and tests of specific areas. So a 30-second chart is giving me enough noise to where I can see almost the entire day on my Sierra charts, while still being zoomed in relatively well. So now I have a 30-second chart and then the 3-second for really timing it. So now I'm using both of those to really time shit, because my 3-second chart's not going to allow me to see what just happened, 5-10 minutes ago, and maybe I want to know what happened 5-10 minutes ago. And honestly, if I had the world's longest screen, I don't want to crane my neck across it to see what happened on a 3-second chart, right? So kind of tuning that out, but not tuning out too much of the noise is really key. Now, there's times where I want to look at the price action over multiple days based off of the ETH profile, the RTH profile. So in order for me to see multiple days, a 30-second chart is not giving me enough real estate. I still want to see the noise as much as possible, so now I'll go up to a 3-minute time frame, which is giving me still plenty of noise, not as much noise, but then again, I'm not really executing off of a 3-minute because I am executing off, the 30-second, 3-second order flow time-based bullshit off of micro shit, if you will. Microstructure is important. But the 3-minute is allowing me to now actually physically see what has happened over the course of several days in a row and still see enough noise. So that's how my time framing is. I know it's small, but I feel if you're really trying to be a precision hitter, you're not doing it when you tune it the fuck out. And I like time-based charts. I don't want to do some goofy shit with Renko bars or tick shit. Because I feel time is an important component. I feel time is an important component, and I just want to know the range and how long ago did that pivot happen. That's all I want to know. That's it. Now, you can look at... so I did point out how I use a 3-second chart to identify volatility and how I adjust to that. Now, you can do that on higher time frames. So let's go back to this, right? Let's go back to this. So you can look at so let's look at, let's just say this is these are just normal bars, high, low bars or whatever. I'm not a fan of candlesticks. I prefer bars. The reason I prefer bar charts is because, on a candlestick, if this is a red candlestick, let's make it red. Well, what is it? The close is down here, some shit, and the open is here. Whereas if this was reversed and this was a green candlestick, well, now the open is down here and the close is up there. And I don't like how it flip-flops like that. Whereas on a bar, the open is always on the left tab and the close is always on the right. But I don't even give a shit about open-close on bars, right? So in my opinion, auction market theory doesn't give a shit about time. And I know that kind of contradicts what I was saying. But auction market theory does not give a fuck about time. Setups can happen in the middle of the night or at random times. And that's auction market theory, and that goes hand in hand with volume profile or bell curves, right? And just to backtrack, somebody asked me about market profile. Market profile is TPO. It's the letters. I don't use that. I use volume profile. I feel TPO is outdated. I don't want to talk about it in this video. Nothing wrong with it, right? You can use whatever works for you, but we're talking about my trading, not your trading. So, but let's go back to this. So, on a 1-minute chart, you can, or even a 30-second chart. Hold on, real quick. So even on a 30-second chart, it's harder for me to judge volatility. It's a lot easier on the DOM, but things are happening so fast on the DOM. What are the average movements? And in my Sweet Spot 2 video, I talk about tempo, and this is what I'm referring to, right? So I suggest you go rewatch that if you've not seen it, because it'll now make this video make more sense, and when you rewatch that video, that'll make more sense too. So... right, so let's just say, we're getting an average. These are 30-second bars. And again, I don't care about the open and close of the bar. I just care about where we've pivoted and how long ago. Where are we ranging? Where are we not ranging? Where have we broke out? Where have we not broke out? And how do these bars align with a volume profile? That's what I care about, not necessarily the open or close of it. I've just been using bars for so long, I prefer them. So if you're starting to see a bar chart, and this is a 30-second, and now the bars are starting to get longer, really on any time frame, right? Now your volatility is increasing, right? It's going a lot further on a 30-second chart than it was, say, in this area. So that's how you can judge volatility increase. But again, I like noise. I like a 3-second chart. So I'm able to really, because I need it first and foremost for precision executing, and it just allows me to really fine tune and dial in adjustments. And the thing is, there are periods throughout the session where the volatility is so wide that maybe using a one contract trade with a 24 tick stop makes sense for me, because it's out of my sweet spot if I was to trade a 6 tick stop. But it can work in that environment. But then there's a point during the session, and it always happens, where it starts to contract. And when it starts to contract on a 3-second chart, that contraction, that average movement is, no longer 4 points, but maybe 8, 2 points. Well, that contracting means I can go back to my original size, and then I can probably run a 6-tick stop, depending on where we are as far as my bigger picture context goes, right? I also have a video on context and how important that is. If you guys have not seen it, you need to watch this video, right? So with that being said, and I say that all the time with that being said, I guess that's one of my favorite words, like shit, fuck, and all those other words. But that's kind of where I'm making adjustments right now. We looked at that P&L in the beginning of the video. I X'd it out. You guys can go look at it. But it's working. It's working well. The problem is most of those trades, I'm not hitting the, 48 tick win or whatever it is, the 42 tick win to make it a 2-to-1 risk to reward ratio. But that's the equivalent of my normal trading on 6 ticks, where I'm trying to fight my way into a trade and I'm not even picking up a 2-to-1, but I'm scalping it because it's not quite working. So I'm picking up less than 2-to-1 risk to reward, but that's because it's not working. It's not, the order flow isn't there. There's something happening, or we're hitting a piece of profile structure where there could be a pivot, because there are areas on the profile where there might be a pivot. There's randomness. When you get in a trade, all you can do is manage risk, and my trading is very defensive. So when I get into a trade, I'm always thinking of it not working and what can I do to protect myself. And in the end, it's luck that makes the trade actually work. Now, I wouldn't say it's necessarily blind luck, because I'm hitting in areas that I know have potential of really good movement. So that's where the edge is. But in the end, this is like a casino, right? You think the casino is freaking out when somebody is losing, when they're losing on the fucking roulette wheel 10 times in a row? No, they're not, because they know that if that wheel spins thousands and thousands of times, they're going to end up making money over the long run. But when it comes to this, it is a coin flip. But the thing is, can you skew it to where every time you flip the coin, you're making more than you lose? And with defensive trading, I'm trying, first and foremost with my trading, I'm trying to hit the most precise area, as precise as possible, because that definitely takes risk off the table. But when I get into it, I'm being as defensive as possible on the trade until it actually works. But I know, based off all those layers I showed you earlier, where I can start maybe holding it, where I can let it test me, or there might be a point in time where I can't even let it test me. I need to just cut it immediately. So I know when to start switching in between those avenues. Maybe this will be a really good scalp. Could it turn into a bigger trade? Potentially. If that's the case, I'll start scaling out more contracts on something like that. But if I think the trade could potentially really run and this is as prime as it gets, then I'm less likely to actually start scaling out so soon and so early. So there's this dance on when I can get away with this and when I can't. And that's why I'm telling you guys it would take me, 30 hours, maybe more, just to explain each of the nuances and the components. Because that's what I do, and I'm not willing to just try to give some half-ass answer, right? So I need to spend a lot of time in case-by-case study until it starts to make sense. And if I'm putting in that much work and effort, I'm selling the motherfucker. Okay? Because that's a lot of effort to just give all that shit away for free. Right? And then making $200 a month off YouTube ain't worth it. So anyways, guys, that's what I'm currently doing. That's where my adjustments are. I hope you enjoyed the video. Please watch the older videos. If you really enjoy what I say, please consider donating to my coffee. Link in the description. Think of it as a tip. Anyways, I'll see you guys in the next video.